The new house price index is falling. Are new home builders and construction companies in trouble right now? That's what we're going to go through in this video. And I'm sorry I'm a little bit late. I was on the wrong stream. What a joke. But anyways, basically the new housing price index month over month came in yesterday at 0.2%, negative 0.2%. So it was reported yesterday, and this is the lowest print since 2018. And you can see that on this chart here that it's going much lower, and it was 0.1% last month. And you have to remember that this is essentially a house price index. This isn't the actual rate of decline in the price. So it's not that a $500,000 house has gone down 0.2%. It's that the index has fell 0.2%. So really, that is across the country as well, that you have to remember that nationally. So some places more than others, and we're going to go into that. But let's see what Market Watch is saying about that. So new house prices in Canada continued to decline in October as the home market is weighed down by the string of interest rate increases last year. Says a little bit about the central bank raising rates, and then about GDP, which is going to stall according to the central bank. But it also says Statistics Canada said that some of the builders it surveyed cited bad market conditions for the fall in new home prices after the Bank of Canada increased its policy rate 6 times since March. And you've got to remember, last year, the market for home builders was so distorted. I mean, if you were in that business, and even all the associated businesses along with construction and home building, carpenters, people who fit kitchens, plumbers, electricians, all these different businesses got majorly distorted by the artificially low interest rates that we had in 2021 and 2020. So essentially, you had a lot of people scaling up their business. You had a lot of people increasing their lifestyle expenses because they thought that this was going to last forever. And this just hasn't happened. So think about it. If you're a construction business or a home builder, then you might have hired all these new staff for your new show homes. You might have built extra show homes to show people your products, and basically all of that has just vanished. All the people have just vanished from your show homes. Demand has absolutely tanked. You weren't making that much money anyway in 2021. You believed inflation was transitory, but your margins were being hit by inflation. They were being hit by labor shortages and also the supply chain disruptions that we saw. So builders were being hit by from all angles. And when you think about a home builder, people buy and then they get delivery of that home 12 months later. So if the builder is really struggling to build it and the prices are rising and the length of time it takes to build that property is increasing, then that means they're losing more and more money. So they get into serious trouble. And right now, none of those inflationary pressures, the supply chain pressures, the labor shortage pressures are essentially easing. None of them are easing, but the prices are starting to come down. So that shows the distress in this sector. It's a lot. You have to connect the dots on a lot of these things and realize what is really happening behind the scenes, because new home prices have been steadily increasing little by little, even though the main housing market has been declining. So that's been an interesting dynamic, and it's really been happening just because demand in certain cities was remaining elevated and has since tanked since then. So the demand dropping is really, really bad news for these builders. So let's see exactly where they're dropping now, because I'm sure you want to know which cities are seeing what's happening. So Halifax is essentially flat, 0%. Montreal flat 2%. Toronto is also flat. Winnipeg, minus 0.7%. Calgary also flat at 0%. Edmonton, minus 0.6%. The biggest drop since 2019 in Edmonton, by the way. Kelowna minus 0.3%. Vancouver minus 0.8%, Victoria minus 0.2%. And BC has been affected massively by the labor shortages. You know, the prices just skyrocketed across rural BC. I mean, BC just has so many issues right now. It is unbelievable. It has a lot of issues with aging workforce, the fact that they don't build a lot of homes, and then the amount of speculation in the housing market in BC is just absolutely off the charts. So all of this creates a mega bubble that you've seen form over the past 10, 20 years. And I've actually spoken to a lot of business owners in BC over the past 6-12 months, and they have said to me how labor shortages are just making their business almost impossible to run. And even though there's demand, even though there was demand for their services from different people, they just couldn't meet that demand because they couldn't get the people to work. Just an incredibly terrible situation to be in. You also have to remember a lot of people who bought in 2021, they gauged their payment on what they could afford based on 2021 artificially low interest rates. And if they're now getting delivery in 2022, and they're having to get a mortgage out because you can't fix a mortgage for 12 months, you can't hold that interest rate for 12 months. So they then go and pre-qualify in 2022 to get delivery. They're absolutely screwed. They're just so screwed. Think about the investor. If you're an investor, you're absolutely screwed because the amount your payment has gone up compared to the amount rents have gone up. Just nowhere near. You're just getting hit by all angles. And most investors, they like townhomes, apartments and condos, and they're all affected by inflation massively because of the condo fee portion of their payment that they have to pay as well. So there's also that to remember. So consumer confidence is another thing that I want to show you guys, and then we're going to get into some charts specifically of Toronto, how far prices could possibly drop there. But consumer confidence is plunging right now. It's absolutely plunging. If you look at where it was during 2020 in the depths of the pandemic, we're heading down to those levels. If you look at where it got in the depths of 2016, where it was a near-miss recession, we are right there right now. So it is not good where consumers are not confident in the economy. So that's not good moving forward, because that means that people aren't going to be looking to make insane purchases like buying homes. There's going to be the people who are younger, I believe. Unfortunately, I believe these are the people that are most kind of vulnerable to the manipulation of the psychology of the FOMO bubble that created over 2021 and 2022. I seriously believe young people are most at risk in still getting caught up in this nonsense right now, because it's difficult. It is very difficult because of the social media addictions and stuff like that. Their psychology is just incredibly open to being manipulated into this market and into this bubble. And I just hope that these people don't get trashed, but the likelihood is a lot of people are going to get trashed. They're going to take the opportunity. They probably took the opportunity this year to get into the market. They couldn't get in 2021. They couldn't afford it. And this year was their opportunity to get into the market. Little do they know what's likely to happen next year and what the yield curve is telling us about the economy, which is it's not good. So let's take a look at housing starts, another big thing that you want to look at when you're looking at new construction. So let me blow this up a little bit bigger for you. And you can see that housing starts are essentially at record highs right now. And they have been since 2020. So housing starts are just up massively. So that's not good for builders. You know, builders have a lot of inventory that they're going to have to get rid of. And there's going to probably be some fire sales that happen, because, you know, they're in a bad position, essentially. If they hold on to the inventory, and I've seen some builders, at least here in Calgary, are now moving to rent out their properties as well, which is just increasing the supply on the rental market. Rents are finally starting to come down but you are seeing that that is a result of what I described would happen in the summer was most likely to happen again, and we'll see across the country, is because these sellers are in denial. You're going to see them flip their home over to a rental property, which is going to bring down rents. And then that makes it an even worse environment for anybody who purchases investment property in 2021. They are just absolutely screwed because their payments are so high that they just cannot lower the rents. So they're just completely screwed. And then they're trying to sell, they're forced to sell next year into an illiquid market. And there's going to be all kinds of cross currents, and we're going to be going through an RBC report tomorrow or Friday, which will blow your mind on how in denial the banks are about everything that's going on. So I want to show you this chart real quick. And it's just basically how far prices could go in Toronto. So I just calculated this really quick this morning to illustrate how much of a bubble Canada is really in. And I'm using detached properties in Toronto as a base, but I've essentially just plotted out a simple trend line. And when these bubbles burst, the prices normally go right down to the historic trend line and usually below it. So that is what is likely to happen with this bubble bursting. So to get back down to that historic trend line, you are talking about a 55% decline. That would literally erase everybody's home equity who bought a home after 2013, 2014. Absolutely mind-blowing, I know. And I know a lot of people kind of can't understand that could happen, but we've already just dropped 20% on the interest rate hikes, and they're not even the big thing that would cause capitulation in the housing market. The big thing that will cause capitulation in the housing market is forced selling into an illiquid market. So the market's illiquid right now. Think about it, if there was thousands and thousands of listings of motivated sellers hitting the market, you would see prices tank. And that's exactly what happened in 2008. Why could that happen? Because people lose their jobs. Because people are in so much debt, it only takes them to have their hours cut or lose one income in a household, and they're done. They're just totally done. Because we've created an economy around credit creation, around debt, and it's doomed to fail. And it's doomed to have these boom and bust cycles that we are going to see continue into the future unless they change the way this economy works, unless we have some structural fundamental changes. But it just doesn't look like they want that to happen. And it's just kind of crazy because no other media source picked up about the new housing price index apart from MarketWatch. That was the only one. Not Yahoo Finance, not any of the financial media in Canada, not any of the mainstream media. So I have no idea why they're not talking about this, but you know, who knows? But anyway, if you enjoyed this video, maybe you'll like that one there. Maybe you'll also like that one there. Watch out for the imposters in the comments asking you to go to WhatsApp. That's not me. My handle is @MarketManiaCA, and I will see